Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Friday, 19th September. Coming up on the show, President Trump gears up for a high-stakes call with Chinese President Xi. Trump's attack on the media intensifies and Intel stock is still seeing big swings. So grab your coffee and let's own the morning. Markets are bracing themselves for what could be a critical call between President Trump and Xi later this morning. Trump has claimed that a deal over the future of TikTok in the US is all but done and that he wants to make more progress on tariffs. This week has been a rough one for Nvidia in China. First, it was accused the chipmaker of violating anti-monopoly laws, and then it told its big tech firms not to buy from Nvidia. On the flip side, an antitrust probe in Google was dropped. But for the first time since at least the 1990s, China hasn't bought any US soybeans at the start of the export season, a sign that Beijing is once again using agriculture as leverage in its trade fight with Washington. Now, remember, current duties between the two nations are 30% on Chinese imports and 10% on US goods. The current 90-day pause is set to expire in November. If no deal is done, then there could be a return to triple-digit tariffs. Well, Alicia Garcia Herrero is the chief economist for Asia Pacific at Natixis and joins me now from Hong Kong. Alicia, let's start with this anticipation over this call between President Xi and President Trump. What's the most that we can really expect out of it, do you think?
The most would be actually Trump's visit to Beijing. It is still unlikely. I think probably it will only be alone on the sidelines of the APEC meeting. But I think a personal encounter will be announced after this call, and that's kind of the big takeaway. For the rest, it's just making everybody know this is Trump's view of the world, that things are going well. And TikTok is, of course, a big part of the story, with Oracle becoming, the kind of the leader in this consortium. I think still ByteDance will play a role there. I don't think China will accept full control by the US, but it is something that Trump can certainly bank on. And that's good news for the market.
And Alicia, what have you made of China's tactics, especially the focus on Nvidia and the fact that China is very keen to develop their own chips as well?
Yeah, this is interesting because, dropping Google's probe, which, by the way, is irrelevant because Google isn't really very present in China, and putting pressure on Nvidia should be read actually as pressuring Nvidia to sell better GPUs, not so much H20s, but better than that, which of course the Trump administration is very reluctant to allow. So I think it's really more that than really stopping Nvidia. Also because we know quite well, for example, Tencent, when they in their recent results, which were actually excellent, they made it very clear that where they had to switch away from NVIDIA H20, it would be much more expensive for Tencent because they have to stack so many chips. So it's not a good news, actually, for Chinese tech companies to switch. And therefore, I think this is really leverage, but in a way, a poker game, if you want, if you see what I mean, on NVIDIA more than anything else.
But could this backfire on China? Nvidia's made this deal with Intel. Does that mean that maybe less chips are made in Taiwan, for example?
Exactly. And actually, we've been hearing not only, of course, a new factory in Beito, north of Taipei, from Nvidia already announced, but also we've heard that even Apple is thinking of building these two-side phones in Taiwan. So, there's this game going on that, okay, you push me, I push you. And that's why I think it is really very important to see what's going on with this threat from China, because this one might actually not end up being successful.
So you sound very pessimistic there. What's the best that investors can expect at the end point once all these trade negotiations are actually over?
Again, I think the call for right after the call is positive because the worst has already been announced on Nvidia. I mean, China is not going to say anything worse than what it has already said, and we might get a personal visit. So investors should cheer after this call. That I think that would be my takeaway for today, at least for today.
Alicia Garcia Ferrero from Natexis, many thanks for your thoughts and joining us here on Market Sunrise. Okay, well, as we've just heard, chips and AI are certainly going to be front and centre of those trade talks between China and the US. Well, Gary Cohn, the former head of the National Economic Council, spoke to our executive editor, Brian Sozzi, and explained why where chips are made is so vital.
There's some good in this, always. Look, the United States, as we know, has to become a chip manufacturer. We cannot be dependent on the rest of the world for chips. Look, we came out of COVID understanding the supply chain better than we ever did before. We understood that without chips being imported to the United States, our economy, our manufacturing economy, shut down. You literally could not buy most of the things that we want in this country. Even simple things as toasters today somehow have to have chips.
Well, you got to connect to your phone, Gary. I need to know when my toast is done.
I guess you have to hit your phone in bed to put the toast down in the morning.
Yes.
So you can do that. So look, we now are in an economy where everything we buy has a chip in it. We can't be beholden to the rest of the world. So to the extent that the federal government is getting involved in encouraging chip manufacturing in the United States, and this started in the last administration with the CHIPS Act, and we continue to press on this independence of vital necessity goods in this country, I do think is a good thing.
Do you view it as the administration picking winners and losers?
I hope the administration's not picking winners and losers. It's not their job to pick winners and losers. What it is, the federal government's job is to protect the citizens, protect our safety, protect our well-being, and we know that chips are a vital part of protecting our country. Simple missiles today have 300 plus chips in them. So to be able to defend ourselves, to be able to build military equipment, we need to be in the chip manufacturing business here. So that I do applaud, that we understand the risk of not having chip manufacturing in the United States.
IBM investing just billions of dollars in AI and its own infrastructure. Where do you think we are in the AI CapEx build out?
Look, it's the AI CapEx build is pretty transparent. There's an enormous amount of money being spent in data centers. These data centers will come on sort of over the next 3 to 4 to 5 years. We'll continue to see more and more use of AI. What's going on right now is, people are using AI, but they're using sort of independent software, independent programs to solve a specific AI problem.
Like an agent.
Yeah, like an agent. So
do my payroll.
Do my payroll, handle my HR, read my documents, help me with my tax returns. Where I believe this is going, where IBM believes this is going to an enterprise-wide solution, where all of these AI programs, these AI facilities will work together. They'll be more coherently, more cohesively related, and they'll have a big infrastructure behind that. And look, that's going to lead us into a really interesting world as people get their data and databases in a more coherent place, and that's what it takes to make AI work. It's going to lead us into a quantum revolution. We think by the end of this decade, we're going to have quantum, be a major part of this equation.
Well, the first thing you need to know is that Trump's attack on the media intensified overnight. Take a listen to this.
Who would you like to see replace Kimmel on late night?
Well, a lot of people, anybody could replace him. The guy had no talent. Kimmel he was fired, he had no talent. He's a whack job. All they do is hit Trump. They're licensed. They're not allowed to do that.
Well, President Trump was speaking on his way back from the UK. Remember, on Wednesday, Disney stunned the industry when ABC put Jimmy Kimmel's show on indefinite hiatus after the popular comedian riffed about Trump supporters' reaction to Charlie Kirk's assassination. Disney isn't the only media giant that's made a move that many see as appeasing the will of the president. Stephen Colbert's late night show was removed from CBS. Days later, the FCC approved the Paramount Skydance deal. Well, the next thing you need to know about is that the Bank of Japan will start selling its holdings of exchange-traded funds, or ETFs. The central bank made the announcement as policymakers kept rates on hold as expected. But stocks in Japan fell sharply. They recovered slightly in later trading. Remember, the Bank of Japan's hike path has been complicated by tariffs, but also political uncertainty after Prime Minister Ishiba's recent resignation. And the last thing you need to know is that gold prices are taking a breather after hitting record highs. Yes, there has been some profit taking, but markets have been assessing the future interest rate path after the Fed cut rates earlier this week. It's worth noting the dollar firmed, which made commodities priced in the greenback more expensive. OK, we're heading for a break now, but stick with us. We'll have more reaction to this week's events and in particular that first Fed cut of 2025. Welcome back to Market Sunrise. Well, it's time to take a step back after a very eventful week and look at the big picture. Mohammed El-Erian, president of Queen's College, Cambridge and former CEO of PIMCO, gave his analysis to Yahoo Finance's Julie Hyman yesterday.
So there were two things. On the surface, we got exactly what we expected. We got a 25 basis points cut. We got a signal of 2 more cuts later this year. But once you go beyond that, it's really confused. The economic projections suggest something else. Higher inflation, higher growth, and that is not consistent with cuts. In fact, according to the projections, we're going to have 7 straight years where the Fed has missed its inflation target. Then go to what you just talked about, the interest rate picture. If you look over time, it's a dispersion, meaning the difference between the people up here and the people down here is so large that there's no forward guidance. So yes, we got a nice outcome with only one person dissenting, but if you go beyond that, as Jim rightly said, it's a mess.
So, but all of that said, do you think they arrived at the right conclusion for the action that they did, which was the 1/4 point cut?
I absolutely do. In fact, I think a 1/4 point cut was warranted in July. So I'm glad that they're starting the cutting cycle. I'm also glad that they are putting the emphasis on the employment side of the mandate. They are facing this very difficult situation, as we heard Gary say, where the economy is going away from them, both on the inflation side and the employment side. So they are deep in the world of second best, and they have to decide which of the risk is larger, and I think the employment risk is larger. So I like what they've produced. I just hate the fact that we don't get clarity and we don't get an anchor from the central bank. We need some anchor in this economy, because otherwise it's going to get really complicated going forward.
What does that anchor need to look like? What is when you say anchor, what do you mean exactly, and what should they be changing?
So in the past, the central bank has always given us a vision of the future, where things were going. This central bank, after its big policy mistake in 2021, where it called inflation transitory, and as I said, we're going to end up at a minimum with 7 years above target, has become highly data dependent. So it's looking backwards. And as it looks backward, it doesn't give guidance to the marketplace, to businesses. And the problem with not having guidance from a central policymaker is that uncertainty goes up. And uncertainty discourages business from investing and can also discourage households from spending.
In their defense, isn't it a really difficult time to give that guidance? I mean, you know, you're in the economics profession. I've talked to so many economists over the past couple of years who have a new sort of source of humility because it's been very, very challenging to forecast what the economy is going to do. That said, of course, the Fed's supposed to be the best at this, right? They're supposed to know. So, but how can they possibly be forecasting in this kind of environment?
So we need them and others to have a transparent discussion on two things that really matter for all of us. One is, what should we expect for productivity? Will AI, life sciences, robotics, where we're seeing incredible innovation, will we get the diffusion through the economy that allows a significant increase in productivity? I believe so, okay, but we need to hear. And then the second thing, you heard that, the first thing wasn't even mentioned. Yes. The second thing, and we heard that in the press conference, is what's really happening in the labor market? Is it a supply issue or is it a demand issue?
Or both.
Or both. And how much of it is both? And how much it would last? That's really important. Chair Powell started saying it's this and then said, well, no, it's a bit of this. They need clarity on this. And I think that clarity is possible on this. But again, they're shying away. Now, I understand on the enormous political attack. I understand that Chair Powell is coming to the end of his term. But if you don't have a policy anchor to this economy, the risk of volatility goes up, economic volatility, not market volatility. The market is happy to bet on the corporate side. The market is this very strange world where it says, I know the sovereign is messy. We have tariffs, we have central bank independence, we have high fiscal deficits, high debt. I know that's messy, but I'm happy to bet on the corporate side.
Well, lots of food for thought there from one of the world's leading economists. We'll dive into trending tickers that are making big swings this morning. That's after a short break. Time for today's trending tickers. First, we are going to take a look at Intel and Nvidia. Intel, well, it's still seeing big swings. In fact, earlier this morning, it was down more than 2.5%. Now, let's have a check, and it's down very little, in fact, now. And Intel stock, well, it skyrocketed yesterday, remember, closing more than 22% higher after Nvidia announced its $5 billion investment in the company as part of a push to produce more AI hardware and products in the US. Today, some of that enthusiasm seems to be fading. We'll keep a close eye on it here on Yahoo Finance. Next up, it's FedEx, and it's in focus after reporting results late yesterday that beat analyst expectations, and that's despite tariff headwinds. And shares are up in pre-market, as you can see, up nearly 5.5% there. Now, the delivery giant said international export volumes fell 3%, but its domestic volumes actually grew 4%, and that helped offset a roughly $150 million hit from the US ending a tariff exemption on small packages made that come from China, part of a broader hit of $1 billion from trade policies alone. Now, FedEx is aggressively cutting costs, parking planes, consolidating facilities, and merging its ground and express units, plans that should save about $1 billion next year. Okay, moving on to the next trending stock I want to put on your radar, a tiny company that has become the market's latest rocket ship, Brera Holdings. The stock closed up more than, get this, 220% yesterday and is gaining another 20% or so in the pre-market. That's after the Dublin-based owner of small sports clubs announced a $300 million private investment sponsored by UAE-based Pulsar Group and backed by Cathy Woods of ARK Invest. Now, the deal will see Brera rebrand as Soulmate, a Solana-based digital asset treasury and crypto infrastructure firm. Stating the obvious, shares are likely to remain very volatile. Okay, finally, another small company that's flying and that you need to know about. Cardialytics, after closing up more than, get this, 92%, it's rising another 9% now in pre-market. It was up 13 earlier. What's driving the rally? Well, Amex just announced a new platinum card, and one analyst firm tweeted that advertising platforms such as Cardialytics are set to benefit from increased access to first-party data. Basically, Amex's new card leans heavily into a strategy that requires users to spend at specific merchants to unlock benefits, and that's at the heart of Cardialytics' business model. Now, if you want to know more about Amex's new Platinum card and whether it's worth its $895 annual fee, our senior writer Ben Walker breaks it down for you. He was speaking with my colleague Josh Lipton.
The Amex Platinum has just gotten a major refresh, and this is a super popular card for people who like travel credit cards. Some of the new benefits are really standouts, and I think they can provide a lot of value to Amex Platinum card holders who are looking to offset that new hefty annual fee, like you said. Before I go any further, though, I do want to say that a lot of these benefits require you to enroll in them before you can use them. So it's important to go into your online account and enroll in these benefits. But the first standout credit I want to mention is that you can receive up to $600 in hotel credit each year. So that's up to $300 twice a year on eligible fine hotels and resorts or the hotel collection bookings made through Amex Travel. So if you have upcoming trips, this benefit can help cover some of your lodging expenses. The next credit is up to $400 in Resi credit. So that's up to $100 per quarter on eligible Resi purchases. Now, Resi is a restaurant reservation platform, but you don't actually have to make any reservations through Resi to use this credit. All you have to do is enroll in the benefit and then use your Amex Platinum card for a dining purchase at a Resi restaurant. The last standout credit I want to mention is you can receive up to $300 in digital entertainment credit per year. So that's up to $25 per month on eligible streaming services. So if you already use streaming services like Disney Plus, including Disney Plus bundles, Peacock, Paramount Plus, YouTube TV, and others, this should be an easy credit to use. And with these 3 credits alone, that's over $1,300 in value. And that's without mentioning many other available credits and benefits, which can provide you with an additional $1,400 or more in value.
So Ben, bottom line, my friend, is it worth it, in your opinion?
Yeah, I mean, $895 is a lot of money. That's one of the biggest annual fees around on any of these credit cards. But for many people, this annual fee, I think, is going to be more than worth paying. If the benefits align with your lifestyle and spending habits, you can get over $3,500 in potential annual value. But, I will say it's not going to make sense for everyone. If you find that you would have to put in a lot of effort to get value from these benefits and credits, like maybe you don't use these services that often, it may not be worth it for you on a long-term basis.
Interesting stuff there from Ben Walker on the value of the Amex card and the $895 annual subscription. Okay, before we go, let's have a look at where the markets stand. We start with Asia, and remember I told you all about the Nikkei and how it fell pretty sharply, actually. It recovered. It was down over 1% after the Bank of Japan's interest rate decision. It wasn't the rate decision that caused the fall in the stocks. It was the fact that the BOJ said it was going to be selling off ETFs, and that really spooked the markets for a while. But, a bit of a recovery there. In Hong Kong, stocks pretty much flat. Chinese stocks fell just a little bit as well. There was a big IPO there in China as well. But generally not reacting as well. Remember on Thursday we had a pretty good day on Wall Street, but Asian markets didn't follow suit, as you can see there. Let's move over to Europe now as well. And European stocks not doing too much either. An interesting story out of the UK. UK government borrowing in August hit its highest level for the month in 5 years. So that's going to be, remember we had an interest rate decision yesterday from the Bank of England keeping rates on hold. Probably not good news for the UK Finance Minister here, Rachel Reeves, as she's trying to service what's becoming a bit of a problem. The debt in the UK rising faster than she can keep pace with it seems. Okay, let's move on to the US futures now. And as you can see, sort of in trading water there after waiting on that Trump call. Obviously, that's where all eyes are going to be on. Okay, that is it for Market Sunrise. Keep tuned to Yahoo Finance for more continuing coverage. I'm Ramzan Karmali. Go own the morning.